This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios here in Mumbai as always. I'm Prashant. With me, my colleague Surbi, and Nigel is making a comeback after a well-deserved break.
Well,
welcome back, Nigel.
Morning, guys. Good morning,
Prashant.
Good to be back as well. And I was in Uttar Pradesh, where's my in-laws, and I had a great trip out there. A couple of factors that stood out. One is the hospitality.
Nothing tells me
it, nothing beats it out there. Wherever you go, very, very homely. But the other problem I think out there is we are talking about the heat here in Mumbai.
Yeah.
It's another level out there. I was in Allahabad, I was in Kanpur as well as Lucknow. And the dry heat over there, it's quite intense. And when I reached, my family member said, Damadji has come. It should rain before you leave Kanpur. To my good luck, just before I boarded the flight, it did rain. So fingers crossed that we see the monsoons pick up out there because it's really hot, for the good of everyone.
Oh, yeah, absolutely. In fact, I was going to ask you exactly that. What's hotter? But I think you've answered the question before I could ask it.
Extreme heat.
Hopefully, you're the good luck that we need for rains. Apparently,
so Lucknow is home for you as well.
My grandparents, yes, lots of childhood memories. But I'll always bat for North Indian hospitality. Prashant, you've spent a lot of time in the north, so you're South Indian.
Hospitality, Damadji hospitality beats the heat.
Oh, actually, across the country.
That's another league, but I'm saying, on the whole, people are very warm out there.
Absolutely. Well, let's kick it off with the market in terms of what you need to know. So you've got a repeat almost. Yesterday we saw a repeat of what we saw day before yesterday. Almost. I'm saying because the price action was not a mirror image, but pretty close. For example, day before yesterday, the market made a low early on at about 10:30 or so. Yesterday, the market made a low at about 11. And then the bulk of the day, the price action was pretty similar too. Like day before yesterday, the market spent the bulk of the day just consolidating, but slowly and steadily moving off the lows of the day. Very slow, consolidatory kind of price action. The one thing which was missing was that unlike day before, there was no last-minute rocket-like activity which took the market up 70, 80 points. So it was quiet all the way through to close at 3:30. But in any case, the point is, the market refuses to stay down for more than a couple of hours, and that is something which has been pretty evident out there. Do we have supportive cues from overnight? Not really. It was actually a pretty blah kind of a day. If you look at Wall Street cues, S&P was down about 0.5%. NASDAQ, that lost about 1.2% or so. We were all talking about and waiting for, what Fed Chair Powell would say in his testimony to the Congress. And by the way, it's a two-day thing. So he testified yesterday and he testifies today as well. But, you'll see lots of headlines about what Powell said and this and that. There wasn't really anything really new in terms of what he actually said. The one sentence which I think is being quoted quite a bit is what he said. He said, Fed remains, and I quote, far off its inflation goal, which means that, there is a fair bit more heavy work to do before they get to that 2% inflation number. But the point is, it's not new information. He said this and he said that. And the last Fed meeting was confusing, right? Because they paused, but they said, well, we got two more to go. So it doesn't really provide new insights into what we heard just last week at the FOMC. Now, the surprising thing was another Fed member who is a non-voter, by the way, Bostic, who came in and actually sounded very, very dovish. He basically said that policy may now be sufficiently restrictive and the bar to hike more is very high. And that is a non-voter, so, less influence, but this was interesting for the market to kind of hear. Let's just get back to and focus on the levels here that you need to kind of work with. It's not very much because the market's not gone anywhere for the last couple of days, except the fact that we've seen dips and then we've seen those dips being bought. So the broad range continues to be between 18,450 and about 18,900. We're closer to the top end of that range. And one just hopes that when we take this out, you do it with some gusto, some enthusiasm, and not this slow creep higher, which we've had for the last many days. In any case, let's look at the lower levels where it would be more advisable for one to get in if you do get those dips and not trying to chase moves higher. So the support comes in at 18,660. That is nothing but the low that we saw day before. And it kind of coincides with last Thursday's low when the market had sold off. And then under it, you've got the 20-day moving average, which comes in at 18,637. The Bank Nifty has resistance at the recent high of 44,083. I mean, this is just a couple of days back, the high that we made. The support for the Nifty Bank comes in at the 40-day exponential moving average, which is 43,487. We left off at 43,859. It's been, as someone said, I mean, the only strategy which seems to be working is intraday. That is, I mean, if you're trading, is to just try and look for a dip, buy the dip, and maybe sell a little higher, and that's working out. So the supports on the lower end of the range for both the Nifty and the Bank Nifty should come in handy if you're doing that. But hot and heavy action continues in mid caps and small caps, even though I might add yesterday NSE advanced decline by close was in favor of declines and not advances. The market on the mid cap and small cap end did come off a little bit, but it's still pretty good, looking pretty good, and that's where bulk of the action has been. Surabhi.
Well, Prashant, take your point. What Fetcher said yesterday probably isn't anything new, but it does reinforce that they're not done hiking. Yeah. And I guess that's why markets were kind of sulking a bit, if I could use the word. So I thought I'll just put up the exact lines from that commentary, if we can get that up on the screen. Jerome Powell said, and I quote, "Inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go." As Prashant said, not new, but it just reinforces their thinking that they don't want to keep the foot off the accelerator just yet. And he goes on to say nearly all FOMC participants expect that it would be appropriate to raise interest rates somewhat further by the end of the year. So once again, that whole thing of that this is a skip and that we're doing a hike in July, all of that is on the table. Interesting reaction according to in different asset classes and markets. The dollar actually sold off a little bit after the comments because some people in the currency markets probably didn't find this hawkish enough. They probably wanted a stronger reiteration that rates need to go higher. So initially the dollar index had sold off. Then right now it's kind of flattish around the 102 handle. By the way, speaking of central banks in the fight with inflation, yesterday we got data from the UK, which is not very comforting because inflation there did not fall as much as anticipated. That's May CPI we're talking about. 8.7% was the number. And core inflation actually accelerated month on month in the UK. So this whole inflation bogey isn't just done and dusted as yet. Going back to the US market, it was interesting to note that the selling in US tech stocks has gotten a little more pronounced. This is the part of the market, of course, that's rallied the most. But yesterday, a lot of chip-making stocks, by the way, Intel, AMD, they were down quite a bit, down between 5 and 6%. So it was selling that you can't ignore. The Bitcoin is rallying. Interestingly, as the US market has been dithering on the equity side, there's some interest in the crypto markets for sure, the highest levels that we've seen in the last 2-3 months. And what's happening is that now you have mainstream financial companies that are talking about launching ETF products with crypto as an underlying. I mean, one of them, I think, is a Bitcoin product that BlackRock is speaking of. And that's why you're seeing a lot of excitement and action in the crypto market. Just, wanted to put that on the table as well. Finally, if you're talking about the flows picture, we have to keep in mind the kind of intense block deal action that we're seeing, which is why we've got such a huge number on the FII net buy, 4,000 odd crores. Count in the blocks that happened yesterday for perspective on that. Domestic institutions were also buyers, about 550 odd crores. But Nigel, we've been discussing this. Maybe the Nifty's been waiting for you to come back. I'm not too sure. But this fear of heights has been really playing out. It's all about individual stocks. Today we'll talk about Z. We'll talk more about Lupin as we go along. But index level, it's there, but not quite there.
Before I left for the short vacation, I whispered to the Nifty bull, wait for me. When I come back, go ahead. Tease them a little bit, but don't go there.
I think that's what it is.
And it's either today or tomorrow that those fresh all-time highs will be hit for sure. That's my reckoning. You just look at it, the December 1st highs, that's still elusive as of now. But otherwise, the Nifty bull has been teasing you, almost getting there and then, in fact, moving away. So we're hoping 18,888 in the next 48 hours, we're going to be there. But yesterday, it was good to see actually some bit of consolidation from the broader markets. The advanced decline ratio ended in favor of the declines. And also you had the small cap index that was relatively underperforming, which is okay. The party is still on out there, but you don't want that index to just run away. So I think that's a healthy sign, actually. The bull market in the small and mid cap space is alive and kicking, but some bit of consolidation is something that I wanted to see, and that's what came about. Now, what did the FIs do? Well, there was some lightening of positions, both on the Nifty as well as on the Nifty Bank open interest, and that's precisely what's showing up in terms of the FI data. On the option side, no big trigger, whether you're looking at the buying or even the selling of options that they did. you're not getting any direction. But for the market on the whole, the 18,850 put and the 18,800 put. Between them, there was 90 lakh shares that were added out there. And there was writing that was seen at both those two strikes. On the upside, 18,900 call, where the bears believe that's going to hold out, and the premium out there is around 25 rupees. So just plugging in the premiums with those strikes, you're getting the support for the day. And we're likely to start off closer to those levels. Support 18,775 on the downside, around 18,805. This is going by the writing that we've seen at 18,000 put as well as 18,850 put. And on the upside, since the premium on the 18,900 call was around 25 rupees on, you're saying that in fact for the day, that should be the range that you're looking at. The Nifty Bank, that's been consolidating a little bit, finding support at around that 43,400 odd mark, not able to conquer that 44,000 odd mark. So those are the two goalposts for you. The 50 DMA is, the recent level from where we did see a bit of a bounce. And on the upside, that 44,000 odd mark, it's being a bit of a hurdle for the bulls itself. The SGX Nifty suggesting a 50-point drawdown, I think close to 40 to 50 points on. We're going to be starting in that support zone. So 18,775, that's the stop loss, if you're looking at getting in or you're looking at a stop loss for the day. So keep an eye on that. I think you need to get in at some point of time. And then, in fact, hopefully we hit those fresh all-time highs.
Lower the better, right? I mean, a deeper pullback, the better. It kind of opens up the risk-reward in that sense. But before we go any further, let's quickly tell you what's lined up here in the first half hour of the show. We'll get you updates from markets across the globe. Cameron Brandt of EPFR Global will join in to discuss the global setup. He tracks the global fund flows very closely. Our research team will get you the top 10 stocks of the day that will be in action one way or the other. And Deepan Mehta will join us at 8:30 with what he's making of things and his view on the latest news flow. Well, let's get you some views now. This is from Money Markets. On rupee, Parul Mittal Sinha of Standard Chartered Bank says the dollar INR has continued to trade in a narrow range in weaker dollar, even as FPI flows from equities and consistent dollar purchases by PSU banks cap the downside. She expects the dollar-rupee pair to trade between 81.85 to 82.25 to the dollar next week, with dollar as the key driver. We'll watch for cues from Chinese yuan as well.
Okay, on bonds, Parul Mittal Sinha of Standard Chartered Bank says bond yields saw upward pressure on domestic supply, worries positioning and elevated global yields despite some correction on hawkish Fed, ECB and similar expectations from the Bank of England. She expects the Indian 10-year benchmark bond yield to trade in a range of 7 to 7.1 over the next week, with the focus now on monsoon trends given the weak start and higher domestic supply.
Well, a lot of stock-specific action for you, and we'll get to that in just a wee bit from now in our special Top 10 segment. But let's list out the stocks for you. TCS, Z, Delivery, LTI, Mindtree, Shriram Finance. We have HDFC, AMC, Timken India, as well as ONGC. Their stocks on the back of positive news flow. On the flip side, you have Sansera as well as All Cargo Logistics, which are stocks which could be reacting to negative news flow.